10 minutes or so to just scene set for what I think is going to be a really interesting panel discussion. I'm very much looking forward to hearing that after this session. So I was tasked to talk a little bit about gender and inclusive finance and what this means for the industry. So I'm going to embark on trying to give us some sort of summary and introduction. For me, there are two key issues here, and one is around the industry and one is around the consumer. So we have two issues. One is around women in the workplace, women in senior roles within the fintech industry, and what that means for the industry. Then we also have the gap that exists between perhaps male and females' usage of digital financial services and how women approach to using digital financial services differently in their lives. So I'm going to try and unpick some of the key issues in both of those areas. Going to start off with industry, and don't worry, I'm not going to read this out fact by fact, but what we did, myself and Camilla, who helped me with this research and who works at Alliance with me, is we tried to look at what the disparities are in the industry. 27 countries in the world are currently led by women, which is phenomenal. Go those 27 countries. But globally, actually only 23.3% of cabinet ministers are women, which means the vast majority in the world are men. Looking towards where we are in terms of Africa, there is a little bit more progress. We have 23.6 in sub-Saharan Africa, so doing pretty well. But really, when you sort of think about that figure should be much closer to 50%. We're still behind. When we look at, for example, Rwanda, they've managed to achieve 61% of their MPs being female. The last statistic we saw in Nigeria, and this may be out of date, but it's only 4%. Representation in executive roles within political parties is still quite low by females. We also see many less females on boards. Only around 19-20% of board seats are occupied by women across Africa. One of the stats I'm incredibly proud of when running Alliance DFA is that 56% of our board are women. So it can be done. There are amazing and skilled women out there who can sit on board seats. There just is a gap. Talking of gap, there's also a global wage gap. On average, with 20 women earning 20% less than men worldwide. And that's much higher, closer to sort of 40% if we go look towards Africa. Only 5% of CEOs globally are women. Where are the other, meaning the other 95 sits with men. That's a figure that's incredibly distorted. Just 3.2% of fintech firms are women founders in Africa, which is still better than in some other countries for sure, but still incredibly low. And only 15% of Africa's tech startups have at least one female co-founder. That is reflected in VC funding as well, which is 5% of the total, which is 12. Africa tech startups go to all female founding teams, and 82% went to all male teams. And that picture is similar across the US and the UK. Africa does not stand alone in that. One thing where significant progress has been seen, though, is now we're looking at graduates. We can debate and discuss these statistics. They may be out for a few percent here and there, but what we're sort of trying to give a picture of here is just how few women occupy senior positions, whether that be in the fintech industry or in things like, for example, our parliament, or generally in this as a significant gender gap that is persisting despite the efforts that we're making to close that. And so let's swap and look at the services. And across Africa, we are still seeing a gender gap. It's improved significantly from where we were a few years ago, and we should all be very happy with the direction that we're going in, but still a lot of work is required. Women, for example, in Ethiopia, India, and Uganda are 20% less likely to have heard of what the mobile internet is. In Zambia, 33% of women lack the knowledge about mobile money compared to 14% of men. Even mobile phone ownership still remains a challenge. There is a 13% gap in mobile ownership, and this rises to 28% when we look at smartphones, which have more features to be able to access the internet. Globally, women are around 15% less likely than men to use the internet. And in sub-Saharan Africa, the percentage of women using the mobile internet increased from 24% to 36%. So as I said, we're seeing an increase, but not necessarily the kind of equity that we would hope and want to be. Women are more likely to have inactive accounts or to not own an account in the first place. There's a lovely statistic about Ghana there. Women's account ownership has increased from 54% to 63%, and that figure was 2021. So I'm expecting that to be even higher as we look for 24 to 2025. And that there obviously still persists this gap. And why? Well, here's just some of the reasons why. So we know that there is potentially gender biases in digital finance product design. Women's needs and specific requirements aren't being coded into product design, even how products are marketed as well. We also know that there are issues with literacy levels and technology and comfort of use of those, with women being less comfortable generally than men. There are cultural and social norms as well influencing decision making. There is more patriarchal structures where men are the primary financial decision makers in the household. Women have less access to accounts or the ability to make financial decisions on their own for their family. Women also generally handle more household chores and childcare, and that creates a barrier for time and responsibility to be able to access and make decisions about finances for family. We also know that fewer girls attend and stay in school and particularly study these STEM, the sort of science, technology, maths fields, engineering, I missed the E. And there is this skill gap creating this economic impact, which is kind of almost circular, in its way. If a mother doesn't go to school and continue and make decisions around the finances, it's unlikely she passes on the education and the motivation and the information that her daughters will need to do that. So I took this quote from the Women's World Banking President, Mary Ellen, and it's quite a shocking statistic for me that even though we've made enormous strides to reduce the gender gap and increase women's economic empowerment and usage of digital financial services and women in senior positions in the finance industry, some countries it will take over 100 years to achieve the kind of gender equality in financial access unless we take urgent action. So there is a significant need and a call to action. And here are some of my ideas, although I know that the panel of experts that are going to come after me will also have their ideas as well. But when it comes to things like increasing women's digital financial uptake and usage, I think designing more inclusive and affordable products that are more designed for women and also utilizes technology for the ability to offer these at affordable income. Banking branches, with their infrastructure that is required, will never be able to deliver the affordability of products and services that women need. And we also need more VC investment into social impact sort of funding, so that funding those fintechs who are particularly working on women's economic empowerment. In terms of regulators and policymakers, we know we need enabling regulations, gender-sensitive policies, and the use of gender disaggregated data so that we can understand what women are using and how they are using it. And we also know that there are many other actors in the space that need to be working together, like including associations, to advocate for an enabling environment, to utilize and share research and data, and capacity build and share best practice and knowledge. And of course, underpinning all of that, because it's everyone's responsibility, is increases digital financial literacy. When it comes to thinking about women in the industry, I think things around equal pay and policies to support women in the workplace are going to be really key, along with education and investment in STEM. I'm not sure if anyone's hearing me. Okay, we had some feedback there that seems to have stopped. So I think we have to look towards the government to really try and make sure that we have legislation that supports women in the workplace and enforces that legislation as well. So it's not just there on paper, but is enforced. Addressing things like, equal pay, maternity leave, allowing, the flexible working hours that women perhaps might need to do childcare, care for parents, etc. And then also we know that industry associations and other actors need to be advocating for these policies, but also providing opportunities for mentorship and networking for women in the space, to be building capacity amongst women leaders, to be thinking about how, accidentally by writing things like previous experience in blah, blah, it stops women from applying for those roles because they don't have that previous experience. Thinking about boards, so few women sit on boards, requiring previous board experience is going to be a challenge for women. And then finally, underpinning that, we need gender diverse teams. We need our industry, our governments, and all the organizations to actually reflect a closer gender 50-50% gap in those senior roles and positions, and to promote more women into leadership and board positions. So let me stop there. Thank you very much for allowing me to be part of this conversation. And I'm going to hand back to Barbara and over to the panelists.
Presenter is in the person of Mamiya Amwa. She's a digital ecosystem specialist with the UNCDF. Please a round of applause for her as she gives us a 10-minute presentation before we start the panel discussion.
Hello, everyone. Good afternoon. Again, my name is Mamiya Owusu-Amwa, and I'm a digital ecosystem specialist with the United Nations Capital Development Fund office here in Ghana. I'm here to present to you on a project that we are undertaking, which really brings together all of the conversations that we've been having today. But before that, let me just give you a little brief about UNCDF, what we do. So UNCDF is a fund within the UN ecosystem, and we are unique in the ecosystem in that we have the capacity to deploy blended finance solutions. So this could be in the form of grants, it could be in the form of loans, or it could be in the form of guarantees to mainly accelerate access to finance. These are the main areas that we work in. And we work with the groups that your traditional financial ecosystem will not take care of, right? So like MSMEs, SMEs, and we work through the already existing infrastructures in the financial ecosystem. So banks, fintechs, and technology companies. So that is what UNCDF does. In Ghana, over the past 5 years, we've been working through a project called Green, where we've worked with some banks to help them expand their agency networks into areas where normally they wouldn't go because it is not so profitable. We've supported some fintechs to test new products around crowdfunding, both crowdfunding for investments, crowdfunding for donation. We've also doubled a bit in the area of remittance, so we've helped other fintechs to test products, remittance-linked products such as insurance, right? So let me just quickly come down to the project that we are doing. So we are running a 3-year project. It's a joint project. So in the UN system, when something is a joint project, it means that not less than 2 UN agencies are coming together to execute it because of maybe the reach or the areas that we want to be able to cover. So this project is being implemented by UNCDF, UNCTAD, and UNDP. And it's mainly about leveraging digital ecosystems for increased MSME productivity. It's a 3-year project that we are running. So we've all been here, we've been talking about how difficult it is for MSMEs to access finance, how the whole ecosystem is quite unfriendly. We've been talking about financial literacy and all that. But what this project is seeking to do is to bring transformative impacts to youth and women-led micro, small, and medium-scale enterprises. And we are looking at 3 main areas. So we are looking at regulation, we are looking at digital infrastructure, and we are looking at digital innovation. Over the period of 3 years, we hope to give 25,000 MSMEs access to digital financial services. We are working across the nation, but we have some key regions of focus: the northern region, Ashanti, Western, and Greater Accra. Also, again, we are hoping to bring tailored digital skills training, so both financial literacy and digital skills training to 10,000 MSMEs at the end of the project. In terms of the regulation level, we are working with the Ministry of Trade to ensure that there's an e-commerce strategy in place, because the bigger picture is that we are going to have a platform which we call the Digital Gateway, which is going to sit with the Ghana Enterprises Agency. And if you understand the Ghanaian system, GEA gives support through the BACs to all the micro enterprises at the district level. So we are going to have a digital gateway platform that will work in 2 ways. So there's information. If you're an MSME and you want information on how to register your business, how to file your taxes, all of the things that maybe you can't, as an MSME, you might not have access to that information on your own, or it's really scattered. We are bringing it all together. And then there's a marketplace where you can put your products. If you do soap, whatever service or products that you have as an MSME, you can put that on the marketplace. So we are working together with the Ministry of Trade to make sure Ghana has an e-commerce strategy in place. As part of that, we'll be training the public sector reps that are going to be running this platform. As I said, it's going to sit with GEA. So we have 3 main outcomes that we are looking at for this project. The first is that digital finance mechanisms are increased for youth and women-led MSMEs. As the first presenter said, women, we need these things more, so we are focusing on that. The second is to ensure that we have a strengthened business support system, and that we are doing through the Digital Gateway. So if you go on there, all the business support services you need, you should be able to have. And the last is that we want to be able to build government capacity and to support, e-commerce through improved policy and strengthened coordination. We believe that once we achieve all of these 3 outcomes, we will have MSMEs, especially the women and youth-led ones, growing and increasing their income generation capacity at the end of the 3 years. Okay, I think I've spoken about this, so I would just want to skip for the sake of time. As I mentioned, there are 3 agencies coming together to implement this, but for the purposes of this conversation, I want to focus on what UNCDF is doing. And what we want to achieve at the end of this project is to be able to develop and scale digital financial services that speak to the exact needs of the women and youth MSMEs that we are working with. And we want to be able to do that whilst providing them financial literacy training as well. Also, specific financial literacy training that speaks to their specific needs. We are looking at 3 areas. As I mentioned, we want to do the digital financial solutions, and we are looking and inviting all FSPs here to come on board to help us around this conversation in terms of developing digital financial solutions for this specific group of people. We would pilot and scale. So I think one of the presenters said here that it's important that you pilot before you go on scale. You just don't copy and paste. What we are seeking to do in phase 1 of this project is to provide grants and technical assistance for interested FSPs to come and test. First, we would support you with research in terms of doing your market scoping to come up with a product that really speaks to the needs of these MSMEs that we are looking at. So for example, a lot of MSMEs have a business bank account, but they do a lot of their business on their mobile phones, either through mobile money, their merchant numbers, or even their personal mobile money numbers. How do you evolve a product for these group of people that takes into cognizance the transactions they are doing on their mobile money? It's a good way for you to know their cash flow. It's a good way for you to know whether they are credit worthy or not, because you see all the inflows and outflows on their mobile money account. How do you evolve a product for this particular group? If you are using the traditional credit scoring rubric, they might not qualify, but if you go outside of the box, you might be able to develop a product that works for them, and that's what we are looking to do. We will support you through the pilot phase. If it's viable, we will support you to be able to scale, because what we want to achieve is that at the end of this project, the adapted financial services that come out of it should be able to scale. Other financial institutions should be able to use that same model to benefit the broader ecosystem. And of course, we are also looking for partners who can give financial literacy at scale in a way that works for most of these, our target population. So again, for the context of this conversation, why should you come on board this project? My presentation is a pitch, really. We've been here talking about all the problems, and I'm giving you a platform to try and solve the problems. So why should you come on board this project? I think overall, we are giving you an opportunity to develop a digital financial product that works for a large number of people that have high growth potential. I think MSMEs make up over 70% of our GDP as a country, and they even employ the most. You find one MSME, maybe there's another person that works with them, another person. They are scattered all over the place. So we believe that if you're able to crack that code, there's a huge market potential for you to be able to build on. The second reason why you should come on board this project to work with us is that we are taking away the risk. When the CEO of Lesego was speaking, he said that sometimes you want to pilot some of these things, but it's expensive. So we are taking that away. Come and use our grants and our technical assistance to do that pilot and see if it would work or not. If it works, we will also help you to scale. So we are mitigating that risk of loss, which usually holds financial service providers back from trying new things that might work. It's also an opportunity to drive innovation, because we are envisioning that at the end of this project, there'll really be that innovative product that works. Even a lot of these MSMEs don't have pension products. They don't have insurance products that speak to their needs. The credit products out there are very expensive. We have micro lending platforms in Ghana that are doing like 6% a month, 10% a month, but these people go for it because they need it, right? So we want you to join us to drive innovation, collaborate with us. Let's find out what we can achieve together. And then there's also positioning. So if you join us on this initiative, you are positioning your organization as a leader in financial inclusion, because you're putting yourself out there to do the research, to do the piloting, to make sure that you've come up with a product that promotes financial inclusion, and also you're contributing to the global development goals, because this seeks to answer a lot of these questions that we've all raised here. And the last is strategic networking. So as I mentioned, the project is a joint SDG fund project. So the joint SDG fund is a pool of funds that seeks to help us achieve the SDG goals. So once you come on board, you've positioned yourself strategically within this network. And of course, you're also working with UNCDF, which I would say in country, or even, like in the whole UN ecosystem, we are the go-to agency when it comes to innovation around access to finance. So as I bring my presentation to an end, I would want to put this invitation out there to all the financial service providers here, to the research organizations here, because there's also a very important aspect of research, especially in phase one, where you're doing a lot of market scoping and supporting the FSPs to evolve a product that speaks to the needs of our target beneficiaries. So we are inviting you all to come on board, work with us to create innovative financial solutions for the people who need it the most in our economy today, which are the women and the young people who are running micro, small, and medium enterprises in Ghana. Thank you.
Oh, please, a round of applause. Didn't you enjoy that? I was just thinking of the few fintechs that we've just spoken, and I was wondering if they are taking notes and thinking of how they can pitch their own solution. Because something excited me on there.
Just to say that I'll leave some materials behind. If you want to know more about the project, it has my contacts, and you can reach out to us to get the conversations going. We'll put out the TOR very soon, by the end of next month. So this is just to give you a teaser of what we want to do, so you prepare to apply. Thank you.
Thank you very much. So Barbara, I would invite you, and then you can invite your panelists, and you can start your session. We've taken some of your time, so you make your questions a bit brief. Thank you.
Good afternoon, ladies and gentlemen. Welcome to this session. This session is about gender and inclusive finance. My name is Barbara Mintamafo. I'm a seasoned banker with over 16 years banking experience. I'm a certified digital finance practitioner, and I'm also a certified gender change maker. I would want to invite the panelists, both in person and virtual, to join us quickly. Okay, the first panelist is Dr. Amina Samo. Can we please give her a round of applause? Please, you can kindly have your seats. Then we have Ma'am Awa. I'm not too sure whether she was able to join online. Ma'am Awa. Then we have Sheila. Oh, Sheila. Let's give her a round of applause as she takes her seat. We invite Dr. Esther Lai. Dr. Esther Lai. Is she online? Then we invite Mrs. Mavis Bokwe. A round of applause for her as she takes her seat. Then the final panelist is Dr. Lucy Ejapon. Dr. Lucy Ejapon. All right, thank you so much. As we get the onliners to join online, we'll take a brief introduction from our panelists who are seated here. I'll start with Dr. Amina. If you can give us a brief introduction of yourself and what you are bringing on board today. Thank you. Dr. Esther, sorry, it's Lucy, right? Okay. Shall we give her a round of applause as she takes her seats? Dr. Lucy Ejapon. Okay.
Hello.
Hi.
Yeah, so good afternoon, everybody. My name is Amina Samo, and I think I've been in the finance space for some time now. What I do is more financial literacy, but more especially to the vulnerable communities. and not so much the high class. So forgive me if my language is homemade. Thank you very much.
All right, thank you. Okay, we'll go to Sheila. If you can give us a brief introduction of yourself.
Yeah, thanks everyone. My name is Sheila Semfuma Nakanyike. I'm the head of program for digital finance at Consumers International, and I've also been in the finance space for quite a while, across humanitarian work, traditional banking, consumer protection, bank policy, and yeah, everything finance. But yeah, glad to be here.
Thank you, thank you. Please let's give her a round of applause. All right, then Dr. Lucy, a brief introduction of yourself and what we should expect in this panel discussion.
Oh, fantastic. So my name is Lucy Ejapong. I'm the Vice President for Institutional Advancement here at Academic City. I don't have a finance background, so I'm coming more from a technology background and looking at producing the next generation of talent that will be in the fintech space. So with this whole discussion around gender diversity, which is very relevant now, I think that we are looking at what can we do so that people are a bit more aware of it and are able to make sure that it's embedded within your processes as you go back to your relevant companies.
Thank you, thank you. A round of applause. We'll be doing a lot of clapping, sorry. Mavis,
Okay.
yeah.
Hi everyone, my name is Mavis Borkwe. I work with EcoBank. I've been in the finance space for 16 years now, from retail to digital to youth banking. Thank you for having me. And I'm asking myself, is the panelist gender diversified? Why are we having all women? But I know we have an interesting conversation. Thank you.
All right, thank you. I'm not too sure if anyone joined online. Otherwise, we'll just kickstart into the panel discussion. Our first question goes to Dr. Amina Samo. The question is, what barriers exist for women and other underrepresented groups in accessing leadership roles within the fintech companies? What are some of the barriers, the challenges that exist for women?
Thank you very much there. I think I'll first give a disclaimer before I go to answering the question. I have an allergy to tech. Up till now, my favorite phone is 3310, Nokia. And so if I don't do too much tech, that would be the reason. Because I believe when I was going to school, my father said, because I pay your fees, read my letters. So I tell my children, because I pay your fees, fix the smartphone. And that's how we have managed. But I think COVID came to change the allergy a bit, since I was forced to do work from home. The number two is stating of facts when it comes to women. I say that due to our natural composition, there are certain things either we can't do or find it extremely difficult to do. What are these? We go through a monthly flow. And up till now, after 40 years of it, I still wish on the second and third day, I was sleeping in my bed instead of at a networking event or something. Number two, it would take a very crazy woman to have a text message on her phone which says the baby has high temperature. To have the presence of mind in the meeting to understand whatever you are saying there. Her mind is just absent. Let's go to number three. Even women CEOs, women managers, women whatever, we wish we had men. Not because we don't like the women, but because we need the time, we need a productive time. And there are certain times a woman just can't be. The woman is pregnant. She's 7-8 months pregnant. What can she do on a trip to Bolga? Any woman or man who takes her on that trip is deemed wicked. Yeah. Didn't you see she was pregnant? We ask. But then she gets pregnant and she gives birth and she's given 4 months away to stay at home. The world doesn't stop when she's at home. the world moves on. Who stays on? It is the man. So in that 4 months, your boss gets so, and it's not just the 4 months. After that, you have 2 years in Ghana to close half day. Everybody who is caring would understand. But we need 8 hours at work. So by the time you finish and motherhood doesn't finish, unfortunately. By the time you are free because some nursery has taken them on to come back to work, people have learned, the men have learned, the men have moved on. The men are in a rhythm that you are not. We should understand this once. This is a university. I challenge you to ask any of your students to take a research into many, many women-led organizations. How many of them prefer a young woman to be their PA? How many of them prefer a young woman to work for them? They always prefer the men. Sometimes you go to organizations and they say, unless you spend 1 year here, you are from the banking sector. If you are a girl, unless you do 1 year, you can't get pregnant. But you just got married. Your in-laws are at home. How do you do that? When you make mistake to get pregnant, you lose your job. Because even though it's not written because it's illegal, you know that immediately you get pregnant, that's the end of you. They will find a way of getting you to go. So we should look at barriers from this end first before we talk about any other thing. I think this is my little submission. Thank you very much.
Thank you so much. You really brought us home. And I would like to share a story. I remember I wanted a change in department, and I spoke to one of my friends to speak to his boss. And the boss asked, does she wear heels or she wears flat shoes? I don't know whether you know what that means. That means maybe she's pregnant. We don't want a pregnant woman here. That's a good one. Okay, we'll go to Dr. Lucy. Your question is, how can fintech firms create and sustain pipelines for diverse talent at senior levels?
So now that I'm one of the only people wearing flat shoes, I guess there's a question that's being asked, right? Okay. Yes, so how can, the question again was, how can we sustain talent and ensure that there's diversity at senior levels?
Yes.
The interesting thing is that, and I think it's not only in the fintech space, it's a lot of in the technology space. You tend to see that men have had the opportunity to work at a senior level for a long time. I think we're in a very beautiful era where there's an emphasis on gender diversity, and I think this is a positive gender diversity, right? For once, people will hear it from our perspective, but it's great that we have men in the room who can hear it from our perspective, who are already having seats at the important table to be able to advocate as well. But the way we are able to do that is that we need to be very intentional about it. You see that a lot of, at least academic institutions, now we're having kind of like a mandate of the ratio of men to women in education, particularly in the STEM fields. So a similar thing can be done for fintech companies that says, what percentage of your senior managers need to be women? What percentage of your senior managers need to be on your exec board? I'll use Academic City as a classic example. Academic City has an executive team leadership of 11 people, and I think 6 or 7 of us are women. Apart from the president, the 2 vice presidents are women. Our director of strategy is a woman. Director of admissions is a woman. Registrar is a woman. And we have a lot of women there. And that is because we are very deliberate about it. And again, it's because we also have male champions. So I would encourage fintech to have a quota to say, what is the percentage of women that we want on the board? Not necessarily to say that we're going to put people who are not qualified there to do it, because there are people qualified there. But then that brings us to the issue of the pipeline. If we don't start training some of our females to be leaders or senior managers in the field, by the time that you want to put a woman there, when you look around, there's none, because none of them have been trained to be doing so. So this is when, again, we encourage fintech organizations to come up with the talent development pool, come up with mentorship schemes. So a classic example, every woman here on this panel should have mentors in the organization to show them the route of how do you get to where you need to be need to be. A lot of us are mothers. How do you balance this whole work-life balance? And also be realistic with them. You can't have it all. Anybody that says you can have it all, no, you have to compromise somewhere. And whichever compromise you decide to do, it's okay for you. If you choose to focus 100% on your family and with the risk to your job, that's okay if that's what you're happy with. If also you want to advance your career and therefore need support for people to be at home, to be doing the work for you whilst you're not there as well, that's okay. But how do we talk about this reality that we face on a day-to-day basis with the younger women who are coming up? How do we tool them to start thinking in different ways? One of the things that we say all the time is that a lot of the times, the reason why women are not advancing in senior positions is because of lack of confidence. A lot of them are doubting that they can't do the job. The difference between men and women is that a man will apply for a job, will meet 30% of the criteria and still apply anyway. Women want to meet all the criteria. If there's one that we can't meet, then we are not qualified for the job. They don't know that the men are faking it. We just need to learn to fake it as well. Do you understand? Let's all fake it till we make it. And we pretend and we'll learn along as we go along. And there's a capacity to do that. So we need to encourage females to take opportunities. And then we that are there, the most important thing is that we need to make sure that we are holding the hands of these other younger women, other different genders, to say, how do we bring you along? And how do we make sure that when you get there, you get the necessary support? One of the things that you mentioned was that a lot of other women would want men to work with. And sometimes we say we are our own worst enemies. Because as women, instead of helping other women, because we have to appear to be tough, we have to appear to be strict so that the men know they can't walk over us. We take it a bit too far, even on our own genders. So we need to be accepting of who we are. And we need to say, that girl could be me next time. How do I tool them? And that is the only way we can create a pipeline, by becoming mentors, by having specific targets to say, we need this number of representation, and making sure that you are building the skill set that is required to do that. And partnering with institutions like ours, whereby, and I have to say this because I'm Academic City and you are here, right? By partnering with institutions such as us to say that, you know what, every year we want a female intern from one of your fintech spaces, one from your computer science places, and start developing these people early so that you get the real raw talent, come to a place that has diversity, and choose from diverse people and get them built and ready for the future of work.
Thank you so much, Dr. Lucy. It's been a very practical session, and I believe we are all learning a lot. It's about being intentional, having the policies in place. Yeah. So the next question goes to Sheila. What role do networking opportunities and industry visibility play in advancing gender diversity in the fintech space? We are talking about networking opportunities like this one, industry visibility. What role does it play in advancing gender diversity in the fintech space?
Yeah, I'll start with a Luganda proverb. They say you can't catch a fish by staying in the house. You have to go to the lake to find the fish. And as long as we stay in our comfortable spaces, we don't want to go out, it's not who we are, I'm naturally not like that, it means that you stay in whatever you've always known, and you won't be able to access all the opportunities that these opportunities bring. And that goes from mentorship opportunities, meeting other like-minded people that could actually help spur you on. Could be something around funding. Usually the funders are within the networking opportunities, but you'll miss that because you didn't come. Mame was presenting around the opportunity that UNCDF has. Those are things we wouldn't have known if we're not here. You won't get to meet new people that you could collaborate with. So for me, I feel like it's very critical for women to go out there. Like sometimes it's even events where you feel like, oh, I'm not qualified. Like she said, we usually want to be 100% qualified. And that's not how real life works. The people who get ahead get out of their comfort spaces. They go out in the places which are fearful and try to access new territories. So for me, it's mainly trying to see these as opportunities to advance ourselves, but also to learn and contribute. We've seen that at least 73% of some of the accidents that happen, if there is a crash, women are more likely to die, 73%. And that's because when these are designed, they use prototypes of male bodies, irrespective of where. which means that if you're not in the right spaces to explain such things or to share some of the things that you know, the people who design these things, which are usually men, because most of the spaces are really concentrated with men because of stereotypes again, you realize that you stay with your knowledge, you understand all these amazing things, but you won't be able to benefit, or no one will benefit from them. When we were going for lunch, I saw something there, Leave Your Mark, which was really cool. I'll go take a picture for content. But I thought that was really, really good. And by going to such spaces, you leave a mark. You don't know who you're inspiring. You don't know what you say that inspires you. When you say something around, we can't have it all. Usually we're always trying, how do you balance career, be a super mom, have the best kids in school, go for soccer matches, rock it at work, be the best at literally everything, including social events, be loved by your in-laws. You want to do it all. We've been programmed to think you can have everything, but being in spaces with other women who have made it, who aspire to some of the things you do, and understanding the realities of their life in a safe space really contributes a lot to ensuring that women are leveraging their strengths and not really sitting and trying to say, oh, this is what it should be, and short of that, I shouldn't, bother. But I feel like networking opportunities create spaces for funding, they create spaces for learning, and they create spaces for us to better ourselves and learn cohesively from each other and partners. So I would encourage really, for such things to keep going, but also to have them male partners as well to be part of these, because we have to move together. We can't do it alone.
Yeah. Thank you so much. Thank you so much. Can we give a round of applause, please? Okay, so the next one go to Mavis. We are moving to the next topic, which is gender-sensitive fintech products and services. Mavis, your question is, how can fintech products be designed to meet the unique financial needs of women and marginalized genders to bring profitability?
Thank you very much. So when we are looking at women and tech or fintech products, we are looking at all financial services and products that are delivered technologically. We are looking at your savings account, but you are able to access it on phone, convenient at your home. These are all fintech products. So for women, how do you design these products to suit us? And also the other end is for the fintech company to have profitability at stake. We are looking at personalizing the products and services that you are wanting to create as a fintech company. Look at how these products will be tailored to us as women. We are so much, we need just a little to do more. So you'll be personalizing products like savings, micro-lending, and a lot has been said from Jumo to Findo to Kiana in Nigeria. A lot of fintech companies are developing micro-lending products, and they are all targeting women. UNCDF just gave us a brilliant submission or a pitch. I must say that we work with them on their green projects, and we reached so many women and youth. These are the things that we want to see from our fintech companies. There is a saying that a more gender-responsive future is a more prosperous one. When you look at the International Financial Corporation report, it posits that about $1.7 billion, which is women-led businesses. There is that value of opportunity for financial institutions. So why don't you tap in and develop personalized products for us? Because we are really growing, we are really evolving. Women-led businesses are evolving, so we need personalized products. We need accessible products, products that will transform us, help to transform our family and the population entirety. We all know the adage, train a woman and you are training, or educate a woman and you are educating a whole population. So let the products you are designing for us be accessible and be impactful. We should be able to evolve from 1 to 3 to 4 because we hold a bigger portion of the population. The last one will be, it has to be trustworthy. The products that we are churning out there as fintech companies, we need to have transparency at its core. It has to be trustworthy because Dr. just said she is she's all she's not that technologically inclined in quotes. She is akin to her old phone. There are a lot of women that have these because the fear of the unknown. It's fraud happening on my mobile money wallet. Are they charging me here and there? Let us make sure that our products are transparent in pricing, more personalized, and more affordable. Thank you.
Thank you so much, Mavis. Thank you. I'll give another question to Dr. Lucy, please. We have two of our panelists who couldn't make it, so I'll be giving some impulse questions, please. All right, what are the best practices for mentorship and sponsorship programs aimed at supporting women in fintech? What are some of the practices for mentorship?
Okay.
Yeah.
So there's different types of mentorship schemes. You can have either a dedicated one where people of influence, like the people we have on this panel, go to places where students are either studying and trying to get into the fintech space, or early career women, for us to talk to them and show them what we've done before, what can you do, what can you learn. And then there's also one-on-one mentorship, whereby within your organization, are there some other women there that you believe have the potential to be able to excel in their field of space? So you can either do this one-on-one mentorship, but it just has to be very targeted. Some people, particularly those at senior management, sometimes you don't have the time. And that is the biggest challenge. But then being able to have, again, use technology to be able to touch base with them once a while to see, how are you getting on? What are some of the challenges you're facing? What advice do you need? Those tend to go a long way. One of the things that you said about our motto that says make your mark is that a lot of the times you don't know the amazing things that people are seeing in you from just observing you, and giving them an opportunity for them to interact with you, for you to ask them questions and set them some ambitious targets to say, okay, if I have gotten here, I always tell my students that anything that we have been able to achieve, you should be able to do better, because you have more leverage, you have more technology than we ever did. Can you inspire somebody to do that? Can you give them some stringent targets for them to be able to, adhere to from time to time? And can you just make that time available to be able to speak with them, encourage them, and show them the ropes to succeed in the industry?
Thank you so much. Mentorship is so important. We need to avail ourselves. We need to impact some lives. It shouldn't be just about us. All right, thank you. So Sheila, there's a question for you. What are the challenges in ensuring that the fintech solutions are inclusive and cater to a diverse customer base? What are some of the challenges?
I think the first one is really trying to understand women. Usually when products are being designed, someone sits there and they think they understand women and they'll design a product, and then it will come on market and women are not using it. We did a research while working with refugees in Uganda with Opportunity Bank, where initially the banks and the microfinance institutions did not want to give loans to women because they just said women default a lot. There was no evidence to support it, but they just said that. And then UNCDF came and they provided a guarantee scheme where they were like, yeah, if you give loans to women and they default up to a certain level, we shall pay back. And lo and behold, they did the research, and 98% of the women paid their loans on time, and they took more. And they even did more with what they did, with the money than most of the loans they were giving to men. So usually there are lots of biases as solutions are being developed based on stereotypes that, people have created out of nowhere or in the course of interaction within the different cultures. And then they use that to make products for women that are not suitable for them. Just like Mavis said, you need to understand the women, you need to design for purpose. Design something that's actually credible. It doesn't need to take UNCDF to come and prove that, women will default. Sometimes you have to take the risk or to at least do a pilot study before you launch something big so that you don't say, okay, we don't have funding. But try to understand, how does this impact women? What can I do right now to try at least and get data to justify whatever decision I'm trying to make? So that has been one of the things we've seen. But the other is that sometimes they're just unscrupulous business people trying to take advantage. For example, when you talk about pink tax, you realize that, I don't know if there are big shavers in Ghana, but you find that a big shaver that's pink or purple is priced almost twice as much as a blue one. And because they know maybe women or school-going girls will buy the pink one, that's priced high. Even like if it's always like sanitary towels, you find that the ones with fancy colors are priced more. The cost of production is non different. It's the same. So you can't say that it's a cost issue, a production issue. But because of that, we pay pink tax because we are women. So just to have pink colored, more fun things, we have to pay more. And people are just taking advantage of that. So I feel that is also not good, and it's one of the things we see as shortages, like sometimes just trying to take advantage of situations. If you can design the same thing for men at the same cost, you could still design the same for women without really exaggerating the cost. So we see that as well. But the other is really also generally providing feedback mechanisms for women, or that are relevant to women in access of financial services, in access of other fintech solutions, or any solutions for that matter. Usually you find that women, at least 70%, control household spending. At least they decide whether it's food, what to buy the most, or clothing. They control the budget, or at least the spending. But somehow the mechanisms in place, if something is spoiled, for example, if you buy something that's expired, there is no clear labeling on where I report. Or if it's women who are not literate in a particular way, they won't have any access to, they won't know how to read or interpret that, or know where to go. So you sit back as a fintech and say, because we have a customer care line and 70% of the calls are coming from men, it means women are happy. No, it's because they don't know that they have to call. Or if they're trying to negotiate between the free helpline that never goes through and the one that's paid, that you have to pay to go through, and I have to decide whether to buy a bar of soap vis-a-vis using that money to call for something at a helpline, I'll choose the bar of soap if I'm a woman. So you find that in the end, I won't complain, I'll just withdraw. I'll have an account, I won't use it because I tried to complain, I couldn't access anyone. So you need to design and to think in terms of what the women are doing, but bring them to the table. Usually this design and everything happens without really consulting with women, or you consult with a class of women and not very representative of all the different types of women that could actually possibly use the product. So it's mainly how are you inclusive? How are you engaging different types of women? Women are not a homogeneous group, we're all different. Even when you look at all of us here, we're very different. Our needs are different. You try to get representative groups, the urban poor, the urban rich, the rural poor, the rural rich, different tribes. Try to see how the different cultures and the different types of women interact with solutions and design accordingly.
Thank you so much. Thank you so much, Sheila. All right, there's a question on data analytics. How can data analytics be used to identify and address gender disparities in the fintech usage and access? I mean, I'm not sure. Okay, should I pass it to someone else? Data analytics, yes.
No problem. Basically, it's us saying, how do we use data to make those critical decisions? And what she said is a classic example about, when they were talking about the number of women that default on loans. Data analytics is able to let you track information and then analyze that data and be able to see what is the true trend. And from the trend, can we use it to predict what potentially can happen? Unfortunately, from what is happening at the moment, a lot of decisions are being made off the cuff of, this is how I feel or I think. So what data analytics allows us to do, it allows us to capture relevant data, mine that data, and make informed decisions. Now, the challenge we have in our part of the world is that we are not even collecting that data. Which means that if you say, how can data analytics help us within this space, we don't even have the data at all. So as fintech companies or any company in the finance technology space, we should be capturing these data over time. And then once we've captured this data over time, then we can mine this data for us to be able to predict trends, be able to predict that in reality, depending on the demographic, where they are coming from, what kind of opportunities exist, what kind of tools can we develop for these people, what are they likely to use. But then we also shouldn't be skewed from the fact that data is also skewed depending on how it's collected. We need to make sure that when we are capturing data, it is enough, it is diverse and it is representative, not for one sect of people, but for a collective. If you look around, everybody's talking about artificial intelligence and the likes. The challenge that we are having is that people are developing tools based on information that is available. And because Africa or Ghana, we don't have that amount of data, sometimes you go to ChatGPT, you ask a question, it can't answer because it doesn't have the relevant data that is peculiar to your environment or where you come from. So we need to be deliberate about that. And we need to make sure that we capture enough data that is representative of the kind of people. And you mentioned some very valid points. Not just people living in Accra, that will give you a skew data, but a good representation across the country so that you can make informed decision. It can help you to even decide what kind of tools to, what kind of technology to build for a particular set of people based on how they behave, based on what they usually do, based on the way they grow up and even their beliefs.
Thank you so much. This is a great submission. Kindly
Let me just add on to that. Let me just say that it's not that we do not have data in Ghana. We have a lot of data in Ghana. What we don't have is coordinated data. Everybody has data. Yeah, hello. Everybody has data, but in a way they want it. Government does not have data. The people who have a lot of data in Ghana is MTN. MTN has so much data, and I'm sure if government want to buy it, it will be too expensive. Government will not consider it. I thought we had the 2021 census, which collected a lot of data. But when you go onto their website to look for a specific data for a specific program, then you realize that the data there is not enough. I was on a project that we're doing in the outdoor drainage insurance product that we want, like government insurance product. And then we realized that we do not have the people who live in the sub-Saharan area, those who live in kiosks. We've numbered them as those living in Nima. We've numbered them as those living in Achimota area, where they are doing the Garid project. Are they in houses? Are they permanent? Are they traders? When you get to the Odo, the Abobloshi area there, which human beings are there? We realize that we have information about them when it comes to voting. We realize we have information about them when MTN want to roll out something. But when we want to roll out financial inclusion, which is serving them finances, serving them insurance, where is it? We don't have it. Even though at the census we ask, how much do you earn? But even ask, who takes salary? If you access how, let alone the person who sells fruits, the person who sells wache, how much do they earn? Are they, in which brackets do you find them when it comes to financial inclusion? I'm doing some work with Insurance Awareness Coordinators Group and with NIC. We are going to rural Accra. And you ask them, do you know about insurance? Everybody does. Do you have insurance? Almost everybody does. What insurance? Health insurance. The business that they're doing, somebody is selling wood. Even the insurance company don't have wood insurance. We don't have stock insurance. We don't have stock in transit insurance. And financial institutions are talking about giving loans. When they give you loans, what do they give you? Life insurance. So that when you die. Everybody is talking about when you die. Who is talking about when you live? Who is talking about livelihood? Who is talking about when the water takes away my bag of corn? Who brings it back to me? Who is talking about when water runs over my charcoal? Who is bringing it back to me? And I realize that we have been talking financial inclusion. We are doing that without talking about how to incorporate insurance into it. And I know that if you give them insurance, the cost of finance will be lower. Because then you have something that you can fall on. But we are only talking about them and talking about guarantee. What about insurance? So data is there. Let me come back to it. But it is not in the form you want, and it's also because we've left data collection to development partners. They come in with their money. They come and do their research. They pick their reports. They take it away. After 3 to 5 years, the project is finished, and nobody remembers to go back again. You ask anybody 5 years down the line, oh, the GIZ people were here. UNDP helped us some time back. And that's all that you will see. Because at this present moment, that money is not there. So when you come with your money and you say, we are going this tangent, because we don't even have anything in place, we just take it up. We should be intentional.
So there's a lot of work to do around that. And I'm going to put a plug on this. So we are doing data analytics as a master's program in Academic City, right? And these are some of the things that you want to tease out. Because with the new and emerging technologies within this field, you are able to put all some of these data together and then make informed decisions. And you're able to mine it, and you're able to even write your own algorithm to try and tease out some of this information that we don't have. And this is a classic example of industry-academia partnership, whereby in academia we're sitting here and constantly saying, we don't have the data. We don't have the data. And industry saying, no, they are there. It's just that they are not being collected in a consolidated manner. We are not able to interpret them, and we don't even have access to them because at the end of projects, they go away. So I think there's a lot of work to be done around there to bridge the gap within those areas.
Thank you so much. Thank you so much. We don't have much time to continue, unfortunately, but I believe we have made some impact. We've given you some information, and we've brought you home. We made it very practical. I would like to say that data is the new gold, but collecting it in the right way, it's very, very important so that we can analyze it, to use it, to make informed decisions. Now, I just want to give my conclusive message, and I'm a storyteller, so I usually tell a story. When I had my baby, then I was doing my gender course, and I could see a lot of gaps. For instance, Amina mentioned them in her introduction, and it was fantastic. For instance, the Ghana Health Service will say, do 6 months exclusive breastfeeding, but maternity leave is 3 months in my organization. Now, even when I want to take my baby to school, the school is opening at 7 and closing at 4, and I'm working 8 to 5. I had a friend who owns a school, and I told her, you are all not fair to us. What do you want us to do? Do you want us to stop the job? Okay, so this my friend had to extend the hours of her school, and I believe it's not just because of people like me. Her school is growing because everybody is looking at hours like 6 to 6 or 6 to even 9, because we need that support to be relevant in our organizations. The health service says breastfeed, there are no pumping rooms, there's no fridge to keep your breast milk. Some people are saying extend the maternity leave to 6 months. Me, I don't even want it because I know I won't be employed by anybody. Like Amina mentioned, we even want to work with men because you are working with the woman and you are already empathizing with all the stress around the woman. So we've said enough. All that we are saying is that we should be inclusive, we should be intentional in our policies, in everything that we do, so that we are gender sensitive. Thank you very much.
We take a picture here. Where is the photo? Please, a round of applause for them. I think this is one of the many conversations that I have enjoyed, and I wished it wouldn't end. But we have to move to the last panel discussion for the day, and we can call it a day. Have you taken the picture? Is it nice? Yeah, they are smiling beautifully. Yeah. Because this is the only panel that we sort of had all the panelists. in person. So just one for the books. Thank you very much, Barbara and everyone. Our last session, please, if you've stayed from morning till now, thank you. Thank you so much. You are the reason we are still calling people up here. Okay, so please a round of applause for yourself. Thank you so much for staying. Our last, thank you, I like the VIM. Our last panel discussion is Beyond Borders, Beyond Barriers, the Future of Cross-Border E-Commerce Payments. And the session will be moderated by Dr. Rita Boateng. But before her, would invite Professor Elvis Cornerstone to give us a brief presentation. Please, is Prof here? Oh, please, a round of applause for Prof as he comes. He is the president of Accra Business School, Ghana. Please, a round of applause for Prof as he gets ready to join us here on stage. Thank you, Prof.
Bless you. Good afternoon to our distinguished guests, faculty members, students, innovators, policy makers, and everyone gathered here today. It is a privilege to address you today at Academic City University College's International Conference on Financial Technology and Business Innovation. We gather at a time when Africa is on the verge of a digital transformation. And the theme we explore, educating for empowerment, the role of digital payment in shaping Africa's e-commerce future could not be more significant. As we stand on the brink of a digital transformation, we must recognize that education, innovation, and technology will determine Africa's economic trajectory in the digital age. Digital payments, in particular, will play a critical role in shaping the future of e-commerce and unlocking new opportunities across the continent. Now, to understand Africa's potential, we must first consider the broader global context. Across the world, e-commerce has rapidly expanded, revolutionizing economies and reshaping industries. Digital payments form the backbone of this global transformation, allowing secure, seamless transactions across borders. In China, for instance, platforms like Alipay and WeChat Pay have become prevalent, facilitating e-commerce transactions and everyday purchase for over 1 billion users. China's e-commerce sector alone accounts for more than 45% of the world's e-commerce transactions, valued at over $1.5 trillion annually. This success is not only due to digital infrastructure, but also a robust focus on fintech education and entrepreneurial training. Similarly, in the United States, platforms such as PayPal, Square, and Stripe have empowered small businesses and freelancers to operate with the same financial sophistication as multinational corporations. These tools have provided M-Pesa has grown from a mobile payment service to a comprehensive financial platform offering banking services, loans, and international remittances. Today, nearly half of Kenya's GDP flows from M-Pesa, highlighting its central role in the country's economy. Its impact extends far beyond convenience as it empowers small businesses, enables informal traders to accept digital payments, and opens new markets to rural and underbanked populations. These types of innovations are transformative. They provide access to financial services for those who previously had none and facilitate economic growth by enabling digital transactions at scale. However, for this success to be replicated across the continent, two critical issues must be addressed. Firstly, trust in digital payment systems, and secondly, education to foster adoption and innovation. Let me first begin with the education aspects in terms of the knowledge-based e-commerce ecosystem. The full potential of digital payment in transforming e-commerce can only be realized if it is anchored in a strong foundation of education. To build a knowledge-based e-commerce ecosystem that empowers individuals and businesses, several practical steps must be taken. Let's explore these steps with detailed insights and global examples that can serve as a roadmap for Africa. Starting with equipping entrepreneurs with digital literacy and e-commerce skills. Now, digital literacy is the cornerstone of a thriving e-commerce ecosystem. Entrepreneurs need more than just a basic understanding of mobile payments. They must be equipped with the knowledge to leverage these tools to grow their businesses, expand their reach, and innovate within their industries. In India, a thriving e-commerce market, platforms like Flipkart and Paytm have partnered with universities and technical institutes to provide comprehensive education on digital payments and e-commerce management. These initiatives focus on teaching entrepreneurs how to use digital tools to manage supply chains, optimize online marketing strategies, and integrate payment systems into their operations. An excellent example of this in Africa is Twiga Foods, an agri-tech startup in Kenya. Twiga uses mobile payment to connect small-scale farmers with larger urban markets, eliminating middlemen and ensuring that farmers are paid directly. By leveraging digital payments, Twiga has created a supply chain solution that reduces costs, increases efficiency, and empowers rural farmers. However, the success of Twiga required not only digital infrastructure, but also entrepreneurial education, particularly in how digital payments create efficiency and transparency in value chains. To replicate such successes across Africa, educational institutions must integrate courses on fintech, e-commerce management, data analytics, and cybersecurity into their curricula. These programs should equip young entrepreneurs with the skills needed to build scalable, innovative businesses that utilize digital payment platforms effectively. By fostering these entrepreneurial spirits, we can ensure that Africa's e-commerce landscape remains vibrant and dynamic. Now, so let's move on to the second part of the knowledge-based e-commerce management system. The rapid pace of innovation in digital payments and e-commerce necessitates continuous learning. Entrepreneurs and professionals alike must keep their skills updated to stay competitive in a constantly evolving market. Educational institutions, therefore, must collaborate with the fintech and e-commerce industries to provide lifelong learning opportunities. In Singapore, for instance, the government Skill Future Initiative is a prime example of how public-private partnerships can foster continuous learning. Skills Future offers citizens the opportunity to acquire new skills throughout their careers, focusing on areas such as fintech, e-commerce, and digital marketing. Companies like Amazon and Alibaba have partnered with Skills Future to offer training programs that ensure Singapore's workforce remains competitive in the global digital economy. In Africa, we can adopt a similar approach. Fintech companies like Flutterwave and InterSwitch have already begun partnering with universities to provide real-world training on their digital payment systems. These programs offer students and professionals the opportunity to gain certifications, internships, and hands-on training experiences, bridging the gap between theoretical knowledge and practical application. Such partnerships will ensure that Africa's workforce is not only skilled at handling current challenges, but also equipped to capitalize on future opportunities. Lifelong learning will be crucial in maintaining a competitive edge in the globalized e-commerce market. Now, how do we also build trust in digital payment through financial education? One of the most significant barriers to the widespread adoption of digital payments in Africa is trust. Many consumers remain hesitant to use the digital payment systems, due to concerns about fraud, data privacy, and cybersecurity. To address this issue, financial education must become a priority. Beyond teaching the technical skills necessary to operate the digital platforms, educational programs should also focus on building financial literacy. In Brazil, when e-commerce began to take off, there were similar concerns about digital payments. Companies like Mercado Pago launched extensive financial literacy campaigns to educate users on the security features of their platforms and reassure them that their transactions were safe. Today, Mercado Pago is one of the leading payment processors in Latin America, driving significant e-commerce growth. Africa can take a similar approach. Educational programs that focus on understanding the security protocols of digital payment systems, recognizing fraudulent activities, and the benefit of using these platforms will help build consumer confidence. As more consumers trust these systems, adoption will increase, creating a positive feedback loop that drives further growth in the e-commerce sector. Finally, still on the issue of the knowledge-based e-commerce system, how do we also empower women and the marginalized communities through digital payments? Discussions were just offered just recently, just a few moments ago, but let me also digress from a different angle. Digital payments are a powerful tool for economic empowerment, particularly for women in marginalized communities. Across Africa, women make up a significant portion of the informal economy, often running small businesses without access to formal banking services. Digital payments offer these women a platform to expand their businesses, access new markets, and gain financial independence. In Bangladesh, for example, platforms like bKash have revolutionized access to financial services for women, especially in rural areas. By enabling women to receive payments directly into their mobile wallets, bKash has empowered them to manage their finances and pursue entrepreneurial opportunities. In Africa, Jumia, the continent's largest e-commerce platform, has empowered thousands of female entrepreneurs to sell their products online. These women have used digital payment solutions to reach customers across borders, grow their businesses, and achieve financial independence. To ensure that the benefit of these digital payments reach all segments of society, education programs must target women and underrepresented groups, focusing on digital literacy, business management, and financial planning skills. By equipping women with these skills, we can unlock new economic opportunities and create a more inclusive e-commerce ecosystem. Now, what is the future of e-commerce in Africa? As we look ahead, it is clear that the future of Africa's e-commerce sector will be shaped by the integration of digital payment and a strong educational foundation. We have already seen how digital payment can revolutionize businesses, increase financial inclusion, and open up new markets. However, to fully unlock this potential, we must prioritize education to empower the next generation of African entrepreneurs and innovators. Through strategic partnerships between academia, industry, and government, we can create a knowledge-based economy where digital payment and e-commerce serve as engines of growth, innovation, and empowerment. This will not only drive economic development, but also position Africa as a leader in the global digital economy. In conclusion, Africa's e-commerce future rests not only on technological advancement like digital payments, but also on the education and empowerment of its people. By equipping individuals with the knowledge, skills, and the confidence to leverage these technologies, we can build a prosperous, inclusive, and innovative e-commerce ecosystem across the continent. It is up to us, educators, business leaders, and policymakers to invest in the education system that will shape the future of Africa's digital economy. Together, through strategic collaboration and innovative solutions, we can build an empowered generation of African entrepreneurs who will transform the continent's e-commerce landscape. Thank you very much, and God bless you all. Thank you.
Thank you very much, Doc. Please a round of applause for Professor Elvis Cornerstone as he takes his seat, President of the Accra Business School, Ghana. We'll take less than five minutes from Mr. Al-Hassan Tahiru. He's the head of digital assets at the Bank of Ghana. I'm told Mr. Tahiru is joining us online. Hello, sir. Can you hear me? Good evening.
Loud and clear.
Okay, all right. So take it up from me.
All right. Thank you very much. Please, just to confirm if you can hear me.
Please, we can hear you loud and clear.
All right. So, of course, in recent years, Ghana, like other parts of the world, or in line with global trends, has seen a significant increase in digitalization of financial services, driven mainly by fintech entities. Who offer innovative services in the areas of mobile payment, online banking, and also giving us solutions that enhance or deepen financial inclusion. So as more people gain access to smartphones, obviously, as we have observed, traditional banking services are evolving, providing greater convenience and accessibility for individuals and businesses alike. For us, as the main financial sector regulator, I can say that the passage of the Payment Systems and Services Act, coupled with the establishment of the FinTech and Innovation Office, has led to several key initiatives, including inward remittance guidelines for payment service providers, a crowdfunding policy, and other key events such as the 3i Africa Summit that was held, I think, in the second quarter of this year. All these actions signify the Bank of Ghana's endorsement of the so-called fintech revolution, and of course, the opportunity to leverage digital platforms, e-commerce platforms, to advance innovation and financial inclusion. But we do this without in the least losing sight of the inherent risk to the financial sector. So we do not shy away from our traditional watchdog role of maintaining price and financial stability. Whilst impacting already in many ways, so in terms of our policies that we've already implemented as a FinTech and Innovation Office, in areas of microcredit, remittance services, micro-insurance, and financial inclusion. You will agree with me that the impact of FinTech has extended beyond its own domain to broader dialogues about unlocking economic opportunities. So I think we have come to a point that the conversation has even moved from financial inclusion to even economic inclusion. Because if you consider advancements, technological advancements like artificial intelligence and machine learning, which give rise to stuff like asset tokenization, fractional ownership, and programmable payment, that have led to, or that hold great potential for democratization of access to investment opportunities and all that. They all pave way for inclusive and equitable economic landscape. So as a regulator and a development, key stakeholder in economic development, the Bank of Ghana looks forward to continue to leverage its sandbox to test innovative solutions from service providers, as well as our own solutions, such as the Central Bank Digital Currency, the ECB. And we call on the innovation community to avail itself to this forward-looking facility to advance fintech innovation inclusion and impact in Ghana. I look forward to, with our esteemed panelists, to very constructive dialogue that on how we can overcome the barriers that this change still face, and how collaboratively we can work together in order to explore the opportunities or possibilities that this new phenomenon brings to us in many ways. You can look at SME empowerment, and you can look at cross-border trade. And at Bank of Ghana, I think I don't have much time, so at Bank of Ghana, we've also been collaborating with other central banks and private sector players in order to, or on how to leverage digital platforms or fintech solutions to empower SMEs through improved access to finance and cross-border trade opportunities. And we look forward to continue to work with industry, academics, institutions, drawing from best international practices to advance this conversation. Thank you very much.
Thank you so much, Mr. Tahiru. That was a brief one. Thank you for calling and reaching out. Bank of Ghana is ready to collaborate. Thank you so much, sir, for that one. We would move on to the next speaker. So would invite Dr. Arnold Kabapo. He's the CEO of Stack AI Ghana, and he would give us his speech. And because of time, we are trying to manage so that we can have the last panel discussion. Please, a round of applause for him as he joins us.
Thank you. Good afternoon. I know a lot of time is spent, so this is quite a tough one. So I'll probably just go to some of the key things. I think one of the key things is that I'm speaking on a topic, beyond borders, beyond barriers, the future of cross-border e-commerce payments. And the concept of e-commerce is not new, as we all know. Historically, commerce in Africa goes back to ancient times. There've always been the element of commerce, the element of trading in gold, salt, spices, and even institutions like Timbuktu, or locations like Timbuktu, became places for both commerce and also for scholarly development, because it became a central point for interactions. Same too can be said about cross-border commerce. So beyond just commerce, we also have cross-border commerce. A lot of work is being done, so the Africa cross-border commerce has deep roots in regional trading practices. For centuries, the continent has been characterized by intercontinental trade, with the exchange of ivory, spices, silk among various populations. Post-colonial Africa has seen many regional trade agreements, such as the Southern African Development Community and the East African Community, aimed at facilitating trade between neighboring countries and optimizing the benefits of regional commerce. More recently, initiatives like the African Continental Free Trade Area seek to enhance intra-Africa trade by eliminating tariffs, fostering cooperation among member states, echoing the historical legacies of trade that shaped the continents. And lastly, I want to talk about e-commerce itself. Prof. Very eloquently described some of the initiatives that are driving e-commerce and talked about some of the key super platforms like Jumia and Co., which have actually propelled e-commerce. And of course, we saw that with COVID. A lot of those initiatives even went ahead to be propelled more. Let me just talk briefly about, I'll just list this, about some of the key foundational elements that are required for the development of an e-commerce cross-border infrastructure. One of it is the public digital infrastructure, that e-commerce or payments can only happen when you have an existing public digital infrastructure that facilitates one, the payments, and also the logistics that enables commerce. So payments, you need to have like central switches. You need to be able to have like the interoperability platforms. You need to be able to process things real time. And all of this is only enabled when you have those integrations. Right now, when you want to do a transfer, it's really difficult for you to do it intra-Africa. And so a lot of initiatives needs to be developed to be able to facilitate some of these things. So public digital infrastructure needs not to just be a country-specific initiatives. It has to be a continental drive. Another thing we want to talk about is just the tariffs, cross-border trade facilitations that needs to happen. Tariffs between countries are really tough. We need to really invest. We need to get member African states to look deeply about how to facilitate goods and services between countries. Some of the initiatives are being developed, but it's not, I think it doesn't go deep enough to achieve the goals I want to see in e-commerce development. And then we have to talk about the technology itself, the tech stacks that we run in. We need to build modular technology architecture that enables us to kind of like integrate across. We shouldn't just build very specific infrastructures. The infrastructure should be able to have separate APIs that can integrate wherever you go, because in Africa, virtually every country you go have their own systems and standards. And working with different solutions providers might be a bit of a challenge, so you want to make sure that you will run on modular architecture that enables this. And of course, you have to look at the logistics. And of course, you have to also look at some of the new initiatives like AI, ML, and data science. You need to be able to access data, you need to be able to consume the data, and you need to be able to analyze and make sense out of that data. A lot has been said about how you collect data, but a lot of work needs to be done around aggregating that data before you can be able to drive the required initiatives. So I'll just do, so why now? Or what now? First, we need to invest in infrastructure. And of course, I urge government, business, and stakeholders to prioritize investment in digital and payment infrastructure. Creating a seamless and accessible environment for cross-border transactions will unlock potential for millions of entrepreneurs and consumers. So mostly when we talk about infrastructure, we talk about the fiscal, but there's a lot of work that needs to be done in the digital infrastructure as well. There are a lot of even public digital infrastructure that continues to exist in silos, that there are no systems for you to integrate. And worst case, when those infrastructures are actually built with public funds, but then other commercial interests build moats around them because they want to then monetize that public infrastructure. So we need to be able to look at these things as public assets that we're actually investing in to serve the greater good. Of course, we cannot achieve this without collaboration and innovation. We need to embrace technology, and of course, there's always the education and empowerment. So thank you for your attention. I look forward to engaging discussions. Thank you.
Thank you so much. At the end of the program, I'm sure we would have all had certificates in crash courses, but that's fine. So, so quickly we'd invite Dr. Boateng. She would have a conversation with the CEO of Jumia, Tamidayo Ojo. Please, a round of applause for them. They'll give small conversation, then we'll have our large, just 2 minutes or 5 minutes. Then we'll have our last panel discussion, and we'll call it a day and go and prepare for tomorrow's session.
Thank you very much. So we start with a brief introduction since people are already in a hurry to go home. Please tell us about yourself and about Jumia. Thank you.
Okay, my name is Tamidayo Ojo. I'm the CEO for Jumia Ghana. Jumia is the largest e-commerce player on the continent. Mm-hmm. We are currently in 11 countries. We represent about 70% of the countries we are in represent about 70% of the GDP of the continent. We've been on the continent for the past 11 years. Many people don't know that. They think we are very young, but I think, no, we're actually 12, 13 years actually this year. Yes, it's been an interesting journey. The e-commerce story or the e-commerce narrative for Africa is quite different from the West. But still, in terms of the potential, in terms of the multiplier effects on the economy, it's pretty much the same. So if you look at what Amazon has achieved today globally, where today it's empowered over 1 million retailers on the platform, that kind of potential exists as well in Africa to kind of empower as many or even more small businesses and SMEs on the continent. Just that the execution of it is very different in terms of, we have very different dynamics as compared to the West in terms of where we are in terms of infrastructure, where we are in terms of policy, where we are in terms of regulation, and the likes. But then that is what we're here for. So we've built at Jumia an African-centric e-commerce platform that is tailored to the specific or unique challenges that we face on the continent. For example.
Yes, so share with us some of the challenges.
For example, I'm sure you know, many of us have seen that in Ghana, for example, there are many places, even on the map, that are called unnamed streets. How many of us have seen that on the map? So the first place I lived when I moved to Ghana was unnamed street.
Named streets.
Unnamed.
Unnamed streets. Oh, okay.
Yes,
so that's the one challenge.
Exactly, because when you think about e-commerce, the previous speaker and doctor from the Ghana Business School have touched on it. There are 3 key pillars for e-commerce. There's the tech platform itself, which is where we operate, but there's the logistics of it, because at the end of the day, e-commerce is digital trade, which is the exchange of goods or services for a consideration, right? And the last, so there's the logistic part of it when you're dealing with goods, because the transaction is not complete until that product gets to the consumer, the buyer. And then there's the last leg of it, which is the consideration, which is the payments, and that's where digital payment platforms come in, and that's where all the innovation around digital payments, fintechs, has really enabled that e-commerce story on the continent. Yeah, so I gave an example on the unique challenges on the logistics side. For example, on the payment side, when it comes to
payments, we are interested in payments.
On the payment side, for example, when it comes to cross-border payments, for example, or international payments, I think we've moved a lot on the local intra-country payments, but in terms of cross-border, we'll give an example, which is today, although we have an intra-African settlement system, it's not working as it should. So many of us have heard of PAPS, yes, and although it's moving gradually, we have about 5 or 6 countries signed up. Ghana, Nigeria, I don't know, I can't remember all the countries, the Senegal and the rest. We have about 6 countries signed up on this system, but today it's not working as should. Still, I'd say 95% of intra-African transactions are still routed outside of Africa. So they go through the SWIFT or the BACS or the ARC payment system, which is, ARC is American, SWIFT is global, there's a European EPS as well. So all of these regions have their intra-country settlement systems, and we are using that today. So what does that mean for us as Africa? If I want to send $500 to somebody in Nigeria, I will pay $95 in terms of fees and charges, because the money has to go first to Europe or go to the US and then come back in. And this is what the PAPS was supposed to fix, right? We're supposed to make sure that we have those settlements intra-Africa, such that the costs are reduced, and also the transaction time is also reduced. So we could almost get instant settlement, which is very important for e-commerce. So today, if you do the SWIFT payment, you need like 3 days, because all the movements between correspondent banks, and on top of that, on top of an inefficient service, you are paying so much. So we have a very inefficient system there. We have the right vision with respect to PAPS. We just need execution on it, and we need to close on it, because we've been talking about it for a long time, and we haven't really made much progress. So that's just another example.
All right.
Yeah.
I think I'll just ask one more question, then I open the floor for further questions, since we are all familiar with Jumia and we use it from time to time. So I just want to know, we are talking about fintech, right? So reflecting on your experience, how has Jumia partnered with fintech companies or payment service providers to enhance interoperability among different payment systems across Africa?
Okay, so on the local side, because we're in 9 countries, on the local side, we've done a lot. Today we have a platform called Jumia Pay, which is more like a plugin for all different payment settlement partners that we have in country. So for example, I want to plug into Cellulant, or I want to plug into MTN Momo, or I want to plug into Paystack. I understand. We do this. We've created the platform where it's more like a plugin, so we can just have that interrupt. We serve as like the switching center for all these guys, so that we can have all these guys plugged in and offer more options to our both sellers as well as consumers. Now, the challenge with doing this on the intra-African or cross-border stage is because of what I mentioned earlier on. It's because it's financial flows between countries, and we have the Bank of Ghana here today, so that's very good. It's regulated. And so usually you will not, Jumia, for example, a private entity like Jumia will not be able to set up a settlement system that manages different countries, because usually it's connections to the central banks of the different countries. And this is where we really need what the policymakers, and we need the governments, and we need conversations between countries to happen, so that we have that settlement system up and running that works, so that the likes of people like us can plug into that, and then I can connect seamlessly with my business in Nigeria or in Kenya or in Egypt or South Africa, for example. So yeah, so that's what, so a lot of work we do on the local side in terms of intra-country, intra-country, but it's very difficult without that settlement or switching system to do that on the intra-Africa level.
Thank you for this insightful information. Please, the floor is open. This is Jumia here on stage. If we have any questions for him, we have only a minute to conclude. Okay. Yeah, I think we can hear you. Or you want to stand here? Okay, we can hear you.
Okay, so we have several layers to protect both the consumer and also protect the sellers. So we do have insurance policies on that pickup stations pay as part of joining Jumia. So they make contributions which goes into insuring the items that are in those locations. So if there's a fire, if there's a theft. Usually if there's a fire, if there's a theft, because the products in the pickup stations do not belong to the pickup stations, they actually belong to consumers. So actually it's on us to make sure that those items are insured, because we also guarantee we protect our consumers. So for example, if a consumer does not get the product, then we either issue a refund if he has paid, if he has made a prepayment for the item, or he doesn't need to pay for it. So there's no liability on the consumer. This is some of the things that we are doing to build trust in the e-commerce ecosystem. And we're also using it to build what you call inclusivity. So one of the things that I think we do not touch on a lot, and which is the unique perspective on Africa, is that even though we say we want to go digital, and we want to do it like the West, we cannot do it like the West. Because in terms of digital readiness, in terms of digital savviness, we still have some work to do. So for example, if you talk of inclusivity, if you move outside of Accra and the big cities, and you start going to the smaller towns, then you start seeing people that are semi-digital or semi-offline. So, for example, they have phones, but they are using YAM phones. Some people are not able to speak or read in English. You understand? So simple, like some small things that we need to do, for example, when the fintechs are designing apps and designing all these platforms, and they're thinking of the user experience side of it, we need to be thinking of local languages as well. We need to think of all the other local languages so that we can bring in more people. And then for the people that are semi-digital or semi-offline, you need an intervention. So what we do at Jumia is 3 years ago, because we know that there is a lot of opportunity and potential outside of Accra and the big cities. We have small businesses. In fact, most of the small businesses are outside those places. We have small, old farmers. And these people have both needs as well, because they also desire aspirations. They desire some of the things you can get in Accra, like the TVs and all of that. And also, these guys also want to use the e-commerce, whatever. So we created an intervention, which is a bridge between the online and semi-digital or completely offline, which is what we call the J-Force. Okay. So we have a J-Force team, which is a team of people feet on the street who basically go into the small towns and conduct two things. One is educate people and transition them from the offline and semi-offline fully online. So some of them have YAM phones because even if they got a smartphone, they would not know how to use it. So these guys are basically people that we train. We empower them as well because we put them on a commission for sales. So whatever transactions they're able to, or sales they're able to pass through Jumia, they get commissions. Also, they earn a living. But they also help us to bridge that gap, which is something we miss here in Africa because we always look at China, we always look at the West, and we talk of Gen Z. But if you think of to Africa, even though Gen Z is the larger population, the purchasing power is in millennials and Gen Y. Yeah, X. It's in Gen X and millennials. So we are talking of people that are above 30 years. My parents, myself, people like my parents, that's where the purchasing power is. The Gen Z is the future. And good thing is that they are already tech savvy. They are introduced to stuff at an early age. But we need to, in the name of inclusiveness, carry everyone along and think about what we need to do, interventions we need to do for Gen X, so Gen Y and the millennials. Yeah. And that's what we are doing.
Okay. Thank you very much. Any more? Okay. How do we still stay with Jumia? Your final words to us. Where is Jumia going, and why should we still stick with Jumia?
Okay.
All right. Oh, we have another one? Okay. Okay. All right.
Am I staying?
Okay. So thank you very much. It's unfortunate we have to end, but hope to see you again. Thank you.
Thank you so much, Doc. Thank you so much. So Melissa, if you are here, Melissa would come and take her seat, and then she would invite her panelists. Please bear with us. This is our last session. And our online community, thank you so much for staying with us. We see you. We appreciate you. Don't be in a hurry to go. And after this session, we can have our final wraps.
Thank you. Hi, everyone. I know it's been a long day. I'm very tired as well. Yeah, so my name is Melissa Ininfo. I am a product owner at Tilted. And Tilted is a marketplace for buying and selling game assets across Web 2 and Web 3 platforms. Also, I'll be your moderator for this session, and I promise it's going to be very short, insightful, and entertaining. You all agree with me that e-commerce is a game changer in the entire world. Previously, if you wanted to buy a dress, you'd have to walk to a shop front, pick that dress up, and pay with cash. If you were lucky enough, you get a POS that is working, that you can pay with your debit card. But nowadays, it's very, very easy to do so. With just one click using your mobile phone, you can order that dress and it will be delivered to your doorstep. You can opt to pay cash on delivery, digital wallets, or even cryptocurrencies. So it's very essential for businesses to adopt strategies that will help boost e-commerce growth, both locally and internationally. So without wasting much time, I will call my panel members to join me here. We have Nanaya Odanso, who is the Vice President, Digital Finance Practitioners Ghana, and Head of E-Banking Operations at Fidelity Bank Ghana. Do we have Confidence here? Confidence Aklome? Yes, Confidence. Senior Finance Specialist, Advantage 360. Mavis Bokwe, Head of Youth Banking at EcoBank Limited. You'll be joining us? You'll be joining us? Okay, that's fine. That's good. So I think you would be the last. Yeah. Your name again? Temidayo. Okay, all right. Nice to meet you. Okay, so in the first session, Nanaya, I'll start with you. As someone with deep experience in mobile financial services and e-banking operations, how do you see e-commerce reshaping cross-border payments in Africa? And also, what challenges do businesses face in integrating cross-border payment solutions with e-commerce platforms?
Thank you very much, Melissa. I think Temi has spoken a lot about e-commerce. He being from Jumia, which is one of our biggest marketplace apps in Africa. We all know that post-COVID, we had a lot of people moving towards e-commerce, and the advent of the apps, people started becoming comfortable. When you need to order your food, you need to order your goods, you need to order your groceries, you go to these apps. And so across Africa, we saw people shifting, and it's accelerated the move or the shift towards these apps. And of course, as you make those orders, it's directly linked, as they have said, with payments. And so once you make the order, you have to pay for it. And because we were all locked down and we couldn't move around, we had to start using some of these payment platforms. In the local ecosystems, so for instance, Ghana, Kenya, Cote d'Ivoire, you realize that because we had mobile money, we had national switches where we could move money. Within local ecosystems, it's easier to move money. But the challenge has been cross-border. And he highlighted the challenges we have with SWIFT, where I'm sending money to somebody in Nigeria, and my money must first go to New York, go and rest in New York for a bit before it can come to Nigeria, and then he gets it in his account. But the other side that we also didn't highlight on was that aside using a SWIFT transfer, you probably would have used your card, your Visa card, your MasterCard. That also has exchange rate risk for the financial institutions, and hence they have to put some markups on it to make it very costly. And also, with those payments, you have issues of cost with the various card schemes. So the main way which we can seem to be able to solve this was PAPS, and that was the African Continental Free Trade Area. But unfortunately, as he said, we haven't really had a lot of uptake from PAPS as we expected to. And it has been mainly due to the fragmented countries, different countries and their regulations, and people not really being open to opening up their markets. And so regulation has been a key thing affecting the integration. I'm moving to the integration part. Also, multiple gateways. You probably have to do bilaterals and have certain discussions with various fintechs in different markets to try to connect. And you have to go to a regulator who may not be very open for funds leaving out because of exchange rate troubles. So that has also been a challenge, the exchange rates. Costs have also been a problem. Data privacy and all of these issues have come together in aggregation to actually hinder us being able to move funds cross-border. But I would say that if we look at platforms like PAPS, and when you look in different regions, like we have Buna for the Arab countries within Africa, that these different fragmented platforms, that if we can all come together to have a harmonized platform that we can use to foster trade within Africa, that will be that next exponential leap that we need to actually have this open market that we need within the ecosystem.
All right, thank you. Confidence. So you work with global trade and finance. What are some of the biggest financial challenges businesses encounter when expanding their e-commerce operations to international markets, and how can fintech solutions streamline this?
Okay, so when you're looking at challenges that businesses encounter when they are trying to expand, first of all, has to do with access to funding. You could have a great business opportunity somewhere in a particular country, but if you do not have the fund that it takes for you to expand to that country, you can't. The market exists. You may ship your product into that country, and then you get your capital locked up in stock that you're unable to sell, whilst you have opportunities elsewhere for you to take advantage of. So one of the major challenges that business face has to do with access to funding. If you do not have the enough fund that it takes, even locally, if you do not have the enough fund that it takes, you cannot meet the demands of the people. Some of the fintech challenges that you can see on the market is, it's spelled MKOPA. So what they do is that they provide MKOPA, yes. They provide funding to businesses. So the way they provide their funding is like that they partner with, the consumer goes to them, so they partner with you, the consumer goes to them, and if the consumer wants to buy a product, they're able to buy the product on credit, so they pay you the business upfront, and then the consumer settles them over a period of time. That's one of the challenges. Another challenge that may not be financial, but have financial impact has to do with payments that we just mentioned about. Because of the fragmented payments we have in all the African countries, it's very difficult for you to receive cash on real time. When you do that, you are paying high costs on charges here and there. Another challenge they face has to do with the volatility of most of our African currencies. So you notice that in Ghana, Nigeria, Africa, wherever, our currencies are not strong as compared to the major trading currency, which is the dollar. So if you are in Africa, so if you are in Ghana, you are moving goods to, let's say, Nigeria, you are moving goods to Togo, and unfortunately, their currency devalues against the major trading currency, which is the dollar. It makes your product now more expensive to those in that country. And if your product is more expensive, it means that people will prefer to buy the local product, even though your product is equally good. In order for you to catch up with competition, you are forced to either slice down your cost, and then the rate at which you are even selling to these people may even be, you may end up even eating in your cost. Yeah.
Okay, so in one sentence, how can this be managed or, resolved?
Okay, so I think I give the solution for access to funding. So also mention this advantage. What we're also doing there is that we are also trying to provide funding for businesses who are trying to expand. So this is also one of the things that fintechs needs to take care of. This is something that the banks are already doing, but sometimes the fintech guys, sometimes these businesses want the money at a fast rate. So I go to EcoBank, I need funds for me to move goods. EcoBank needs to do their due diligence. It will take a lot of time. They need to look at my collateral, and that I may not even have the collateral that it needs for me to get that fund. So these are some of the things that fintech can take advantage of. Be able to provide funding for people who want to expand their businesses, and be able to see how they could arrange so that the funding they are given, they do not necessarily need a collateral, but they can find a way to leverage on the business. So the business itself, or whatever goods they are moving, will serve as the collateral in that particular transaction.
All right, thank you, Confidence. Taya, right? Temi, okay. Temi, so how can the evolution of digital payment solutions contribute to the growth of e-commerce, especially in developing markets?
Okay, so we've talked about some of the challenges that we've had. If we think about the friction that we have with respect to e-commerce, one of the biggest challenges with frictions that we have is on trust. And the other friction that we have is on payments, right? So the trust around, so there's trust, which generally is impacted by payments, which is impacted by services, which is impacted by the fact that will people get refunds. The good thing about digital payments is that it lubricates all of that. So the more advanced we are with e-payments, so let's just think, for example, of what M-Pesa or Momo has done for us, even in Ghana, because Momo is also, so Ghana is also one of the high mobile money penetration countries, I think second after Kenya. And you think about how that has helped small businesses, people in the very most remote areas. And again, I mentioned the word inclusiveness. I think that's the biggest gain that we get from digital payments evolution. Like the more seamless it gets, the more widespread it gets, the more inclusive it gets. We are bringing more people into the economic growth story for Ghana and for a lot of African countries. And I think that's the biggest bang for us. If we talk about cross-border, then we even start to say opening up small businesses in Ghana to the rest of the world, which is the advantage that the West has today. I'm a seller. I'm not big. I'm not, I don't know, what's the big guy? I'm not Unilever. I'm just a small guy that is making customized hats. But because of the e-commerce sophistication or the payment sophistications abroad, I'm able to sell from the US to Europe. I'm able to sell from the US to Singapore without any stress, all from the comfort of my home. That empowers people, that empowers businesses, so that you don't need to think about, when you think of reaching the world, you don't think about all those things. You focus on what is your core competence, which is making my product. And that is the value that I feel like as we continue to evolve, as we continue to make digital payments more inclusive, that's the value that it will bring. It's going to lift the entire, lift the entire economy, bring everybody in. It's a super way to bring inclusiveness and economic prosperity to not just the big towns and cities and very educated people, but even the small farmers, the small businessmen that are sitting in Bolgatanga, or they are sitting in Wa or somewhere like this.
Yeah, it makes it easy for everyone. Yeah, so Mavis, how are banks adapting to the growing trend of e-commerce among young people, especially in countries such as Ghana and Nigeria, where online shopping is more prevalent?
Thank you. So if you look at Ghana, about 34 million of us are using internet, and 80% out of these are youth. We are so tech savvy. We want everything on the go. Our preferences must be acknowledged when we are designing products and services that would be able to come on alive at the e-commerce section. And so how are banks able to address these challenges? What are some of the strategies? He mentioned exchange risk in e-commerce. He did funding. He did visibility. So today, banks are collaborating with e-commerce platforms like Jumia, like Tonaton, like the Buy Now, Pay Later, and that will hinge on visibility. So if you take EcoBank today, you have a lot of companies that we are driving Buy Now, Pay Later policies with, from grocery to beauty to towels to logistics to even travel, Adansi Travel, and so much collaboration. So when you see EcoBank advertising these products, it makes the vendor visible to the whole world. When we look at the risks, interest rate risks that he mentioned, you look at for the Pan-Africanity of EcoBank, and we have the rapid transfer services where you don't have to take your money to USA before it gets to Zambia, before it gets to Nigeria. You just have your money transferred same day, you have same day value. Banks are also ensuring that there is that security features in e-commerce. Now we are doing tokenization to prevent fraud. We are doing the two-factor authentication. We are also doing the 3D secure. And now you don't really have to hold your card and go and do your transaction. We have the contactless. You can just tap on a pause. You can just add it to your Jumia app, and there you go. And we are having real-time notification for our consumers, because once the transaction is happening, it has to be notified for the consumer to know, or for the youth to know that the transaction is complete. And so these are few strategies that banks are driving to catch up with the e-commerce landscape.
Yeah, thank you, Mavis. And for the real-time notification, it also builds trust, because they know that.
That is, yeah.
Yeah, that's a good point. All right, so Mavis, again, given that many consumers still prefer cash on delivery, what strategies is your bank implementing to encourage more young people to use digital payment methods for online purchases?
So there are so many studies around cash on delivery. If you look at Canada, their cash on delivery rate is 0. If you look at USA, they've posted that by 2026, it would fall from 2 to 1. Now you come home, you look at Nigeria, it is 18%, and if you look at Ghana, it is 16%. But Nigeria and Ghana, their population sizes are different. That's why you see Ghana lower than. We need to build trust so that our youth who want on-the-go services to be able to use these platforms to make transactions. Otherwise, we would just not do remote online transactions, but we'll go to the vendor and do cash. And we have to do seamless products like mobile apps, like online banking, with a robust technology that does not fail. And even if they fail, if you look at our card scheme, you can bear me out. Visa is doing 30 days for chargeback. MasterCard is doing 45 days. Look at Ghana. We have the GH Link card. In Ghana, if we push more transactions through GH Link card, we are able to resolve the issues at a go, and we'll build trust, and our youth will be able to do their transactions. And then we have the funding bit. We have the loyalty partnership too, because I buy, you give me some discount. Today we are running cashback on Visa transactions. And it is good because customers could be calling you, oh, I did a transaction and I'm getting this discount. They are so excited. For us youth, that is what we want. We want to pay little, but get the service delivered faster and seamlessly. Thank you.
Thank you, Mavis.
Which is the policy, right? So recently, I think last year or 2 years ago, we implemented a charge on digital payments, which is Momo, the levy on the Momo. So if we as a country say we want to go digital and we want to go cashless, then the policy should follow, right? Because we have seen the impact of that policy implementation on our cash on delivery rates, which has basically been going in the other direction. Because you might say 1.5% is not a lot, but for the small businessman, that's a lot. And it's enough for them to switch back to cash. So I think as much as all the stakeholders and the private sector are doing a lot of the work around developing seamless solutions and bringing transparency and trust, we also need to have the policy follow-up on it as well to make sure that we have a 360 view on executing this and making sure that it works for us.
Thank you very much. Before I come to you, Nanayao, so 2 weeks ago, I wanted to buy yam chips and pork. I went to this vendor at a local restaurant, quite popular in East Legon. So after I made the order, I got my food. I was like, do you accept Momo? She said it in our local dialect. She said, Minji Momo, mi business, sir. You know, which literally means I don't accept Momo. I don't joke with my business. So in this case, building trust. How can e-commerce platforms build trust with consumers in markets where cash is still the preferred payments method, given the push towards digital payment solutions like Momo and M-Pesa?
Yes, Melissa, that's an interesting question. And I choose to look at it from just as we are, how do we build trust? Today, you meet somebody, and you meet somebody, you like the person, you tell the person, trust me. It doesn't work like that. The person doesn't just trust you. What you have to do is that as you continue interacting with the person, as you continue showing that you are trustworthy, doing things that makes the person believe that, oh yes, this person has my good thoughts at heart, then the person builds trust. And it's the same with these platforms. I think what we need to do is to build these use cases and try to fix the problems with them, try to make them very, very accessible, easy to use, and make sure that they work. People don't execute transactions and their transactions are hanging and they're not getting value. As transactions are going through and transactions are getting fulfilled, then people begin to trust the systems more. As they trust the systems more, then there's electronic word of mouth. People start telling others, this system is very good, it worked for me. And as they keep telling others, their testimonials, people begin to build trust. In the 15 years that we've had Momo in Ghana, when we started Momo some 15 years ago, I remember when we first started, we were going around, people didn't understand the concept. What's this? It took till around 2014, 2015 for Momo to actually leap out and be able to become so accepted. And that's because people got used to the idea of, okay, I can send money from a mobile phone to another mobile phone. And so building trust, I would say, is making sure that they are meeting all of the problems. And one of the problems that, as they mentioned, has to do with the cost. Currently, if I put 200 cedis on my mobile money wallet and I decide that I don't want to take it out, I want to use it to make payments. As I transfer it to another person, I'm charged. As that money stays within the ecosystem, assuming it goes through 10 people and it comes back to me, by the time it gets to me, the value has reduced. And so we must work on some of these things to make keeping value within the ecosystem cheaper, removing some of these levies, and also deepening some of the initiatives we put together around the digital identity issues we had, which now, with Ghana cards and other identification systems in various countries, have come to solve, where you actually know who you are transacting with, and it's able to reduce some of the fraud issues that we have seen.
Thank you, Nanayao. Confidence, how can smaller e-commerce businesses compete with larger players who have the ability to offer deep discounts and bulk purchase deals?
Okay, so competing with bigger e-commerce businesses, right? They already have an advantage that you do not have. So you have to find another advantage that they do not have. The emergence of AI, okay, the emergence of AI have made it possible that most of these large organizations have decided to face off their customer service support. So mostly, if you are trying to reach out to a large organization to make an inquiry, you get a bot chatting with you, giving a response. By the time you reach out to a human being who gives you the response that you need, you may either get frustrated and then terminate the interaction altogether. So you're a smaller e-commerce business. You have the chance that you could interact with your customers directly. Take customers' feedback. So a customer reached out to you, the customer bought a product from you. He feels like this product could have been done like this, like that, like that. Take the feedback and resolve the feedback instantly. Someone reached out to you, has a complaint about something. You don't just brush them off. Try to address them and let them see that whatever feedback, whatever they are saying is valid. You agree with them, and then you find a way to solve their problem. Another way you can look at to compete with them is trying to build brand stories. So you live within a community. I'll use these guys, for example, Warm Their Feet and then Wear Ghana. So Wear Ghana will tell you that any product you buy, or if every cloth you buy, you are providing employment to this, that, and that. Warm Their Feet will tell you that for every footwear you buy, you are also putting on a shoe for someone in a rural community. So people would want to buy from you not because they want to buy your shoe, they want to buy what you are wearing. They are buying the brand story. They are buying the story you are sharing with them. So that's another way that e-commerce or small businesses can take advantage. That's some of the advantages that e-commerce businesses have over the larger ones. Yeah.
All right, thank you.
This is
briefly
e-commerce. So,
yes.
So what we see with large distributors and small distributors, what we see is that for e-commerce, you level the playing field. So what you have as a traditional advantage of the large guys is that they have the distribution networks across the entire country. But what that means is that they set up warehouses, showrooms. They have huge capex costs, and they are able to reach those consumers. Now, what e-commerce does is that you, the small person, can also go there. You can increase your reach without the added cost. So that's like an advantage that you get to level the playing field with the big guys, and you can compete even on price. The other thing with the e-commerce thing is transparency is very important. It also builds into trust. And if e-commerce, the small-scale players could just pay a little more attention with the communication on the platform. So you provide all the information that the consumer needs. You make sure that you give the right pricing implications, including cost of transport, if there's a cost of transportation, if there's a tax, and let them know the full view of everything. Then also creating the social proof or reinforcement, which is very powerful today because people today are taking their recommendations not from brands and marketers and billboards, but from people, from word of mouth, from